Good afternoon, evening, everybody. It is Mark Coe for April the 5th. I thought today just looks so good. How do I say this? I think every once in a while you just have to go back and talk about the basics of what we do in this approach in the peak zone class and the peak levels. This is good stuff. I'm going to go over a couple currencies, a couple futures markets, and show you it. I know so many of my viewers are really focused on the short term, so I'm going to be a buddy here, and I'm going to stick with the short term stuff. So I have 15-minute charts up here. That's all it is, 15 minutes. What I want to focus on here is the levels. I talk about levels every day. I produce the levels on my analysis every day. The only thing that gets a little different logic is the longer term model. But everything we do in the shorter, let's call it even medium term, we really focus on levels. So let me show you how the levels work here on just short term stuff. This is for all my day trading friends, all my short term scalping friends. Want to look at this. This is pound dollar. So now this is the big part of this that I think it gets missed by a lot of people. Understanding how powerful the short-term levels can be when you're doing them at bigger picture zones. So for days, not today, not yesterday, for days, I've been focused on 2400 to 2440 in British pound, right? Pound. Within that zone, let's look at the levels that get presented here. Now, here's how I do it. I take the wicks. That's how I start the drawing, and it creates this zone. And what I do with the wicks is I pull them up to the candle open or close. So right here you see a candle open. This is from yesterday. So that level was there yesterday. This is the beauty part of it. When you get presented with this level in a wider level zone, which is exactly what pound was, 2400 to 2440, look at the action off of that, right? So everybody that wants a tight stop, this is how you go do those tight stops. You have to find the level where the market will show you the reaction. And the market showed the reaction yesterday. It just was very nice to you that it came back and allowed you to play it again this morning at 2:30 a.m. Didn't allow you the rest of the day to come at those levels, but it gave you the better part of 24 hours to play that zone. On the top, I'm not one that was looking to fade this move, but I'm just going to show you what was there on the short term. Again, from the same analysis, the wick to the candle, pull it across. Look what you got. You didn't get massive sell-off, right? The overall bias has still been one to look to buy dips, but look at level to level. Look at your long opportunities, your take profit, or even short opportunities. This is a 4-point zone in the pound. Violated by what? 1 tick on top, 2 ticks on top. There's nobody that should have been stopped out. That was a 4-point zone. If you can't handle 6-point risk even in your short-term day trading, you got to really start to contemplate what you're doing here. But let's look at the reaction. First time, 92 trades down to 65. Second time, 97 trades down to 51. I don't know what the third one's going to end up, but so far in early Asia here, we're 98 down to 80. So 3 reactions, all from highlighting the zone. That's all it was. Want another one? Let's take a look at dollar yen. Let's take a look at dollar yen. So here's dollar yen. I think it's so good to go back and do this. Look at the levels. So the analysis overnight from my worksheet, the long-term look was anything above 1140. Now what do you see from 1140 short side? So the zone got presented at 10 a.m. this morning. That was where the zone got presented. It revisited it at 2 o'clock. That was FOMC minutes. The exact same zone. Look at the reaction from that zone. 1145 trading 1045 in early Asia. That's just a big figure for your day traders. There's nothing wrong with that. It's $1,000 on one standard lot, isn't it? By my math, it is. Let's look at some futures markets. S&P. Now, S&P got really well bid off the ADP number this morning at 8:30. And so what I said is that until we clear this 70 level, I would look to fade the extremes. We traded just above 70. But what do you see happen at 70? Almost carbon copy to dollar yen, which is that you found a level, it was 75 that it reacted. 75 still fit in our wider zone. If you go look back, and I understand from a short-term perspective you may not be looking back, but I always do with my analysis. So that's where you see that wide zone. But look at the zone. So the zone comes into play at 10:15 a.m. this morning. Revisited at 1 o'clock. So here's what you knew of the zone. You knew that that zone represented a 10-point sell-off. It's the first zone you can find throughout the day that gives you a 10-point sell-off. All you had to do is pay attention to it the next time around. It traded to the top of that zone, and then there's your reaction. 30 points lower. Now, granted, that's on FOMC, but regardless of the 30 points or just the 10, it's still money. And so that 30 points, by recognizing the sell-off zone, that was a $1,500 move on one contract. Look at crude oil. Let's see if crude oil had any. I don't know if crude oil had any or not. I know crude oil had inventory data this morning. I don't think crude oil gave you the same opportunity. Here's what you would have seen in crude oil by being able to look for the zone. Now here's an idea of one that doesn't work the same way. So here's crude oil at 545 this morning. Rotates off, it's 20 ticks. It's not very substantial. Then it makes it through there, right? So if you're looking to play the zone, there's no money there and probably a small stop out. So there's an idea of of a pound market, a dollar yen market, an E-mini market that all paid. And here's an example of a crude oil market with the same type of logic that doesn't have much of anything there. But what does it have on the bottom side? Does it have reaction? There's not massive levels to look at. If anything, you saw some minor consolidation at these zones, but there was nothing massive to look at. So, by all means, there wasn't a whole lot of opportunity in crude oil because what you saw was just a pretty big sell-off. Let's check out gold. So this will be what, the fourth market we look at. Let's look at gold. Did gold have anything for us? Well, gold, the idea in gold has been to buy dips into 1245. Oh, what do you know? Gold. Does anybody see a level forming in gold? Is it just on top of the 1245 that the longer term analysis has had us pointing to? So there, it's the exact same setup as what we just saw in yen, pound, E-minis, and crude oil. Right? So this is now 4 out of 5 markets that have paid. What does this move give you? 2-point zone. So far that's it's a $12 move. So that's $1,200 in one contract. And where does it trade? Back to the next level. Level to level. Levels are so key. Levels are key because they're reference points that the market has already showed you it will react. That's what a level is. Levels have memory. That's why we look at them. Where people start to get confused is they don't take the extremes and say, wow, there's something in the extreme. They miss the extreme and they say, well, what about this little zone? Here's a little level. What did this level show me? This level showed me $2. This level showed me $15. Do you think I want to look at that one? Yeah. Why? Because it's a bigger level, it's more important, and there was more of a reaction. That's the difference in levels. So you have to get involved in it. You have to start to understand the analysis and understand the value of what's there. The value is not so much that you get this big reaction. The value is that you had hardly any downside, and so you're allowed to participate in that, right? Even in crude oil, if you had played the same logic and gotten stopped out, it was about an 8 to 10 tick stop out versus all these winners. These are the winners are eclipsing the losses by tremendous amounts. That's the real key logic. So for the 5th of April, I hope you guys had a great day. It was an exciting day in the markets. It did not look like we were going to see that turnaround at 2 o'clock, so it was very nice to have that happen. I have to applaud the FOMC for their minutes to be able to allow us to trade on that kind of stuff. So you have to enjoy the FOMC for something. Anyway, for the 5th of April, Marco, hope you guys had a wonderful evening. I will be back with you next week. No more updates this week. I'm traveling, so this will be the last video for the week, and I will catch up with you all next week. Cheers.